As we just heard, the Eurozone's PMI data was surprisingly disappointing. I spoke with Rob Dobson, senior economist for Markit Economics, and I asked him what this data means for the European economy.
It was a little bit of a surprise. It was, as you say, below expectations. But again, we're not seeing rates of contraction falling to very severe rates like we saw during the financial crisis.
When we talk about the outlook for Europe, almost every economist expects near-term weakness in Europe. There's not a lot of growth that's expected. Most of the growth is expected in the second half of the year. Do you agree with that?
I would agree with that. We were hoping possibly that some of the short-term indicators indicate a recovery in Q1 or Q2 if we were lucky. What we've seen with these numbers is that that's probably going to be pushed out into the third quarter, as you say, particularly with countries such as France showing signs of accelerating downturn and really growth only being focused on the solitary core, which is now Germany.
I'm going to ask you a question about chicken and eggs. Does the Eurozone economy need to have the economic improvement first before it can create jobs, or does it need to create jobs first before we can see economic growth?
That really is the fundamental chicken and egg. I think we need to see the economy starting to grow. Once the economy starts to grow first, that'll then give companies a bit more confidence to start hiring more employees, more workers. I think at the present moment, outside of Germany, business confidence is still pretty muted. That's going to be a disincentive to hiring. Companies don't know what their outlook is, and if they don't know what their outlook is, they're not going to commit to additional employment.
Investor confidence in Germany, for example, has been inching higher. So at least investors and the market are expecting a significant rebound. Give us your take on which countries are doing well and which countries may not be doing so well.
Well, from our data this morning, what we're seeing is very much that Germany is doing well. It didn't do as well in the February numbers as it did in the January numbers, but it's still registering growth with its manufacturing sector starting to stabilise. Some of the forward-looking indicators in German manufacturing, they're also looking good. Outside of Germany, though, what we're seeing is that the domestic markets in those countries is still very weak overall. And it's only really a country like Germany which is benefiting from some of the pickup in economic growth in the US or Asia, particularly China, which are really starting to see those benefits. So I'd say at the moment, growth very skewed towards Germany, not so much towards France. And can Germany support the whole Eurozone on its own? Probably not.
What's wrong with France?
France is having, there's been a lot of sort of new policy. There's a new government put in place that obviously causes some disruption. But what we're seeing very much in France is it's not competitive in terms of its exports, and its domestic market is very, very weak. That's had a knock-on effect. French unemployment rate is about twice as high as what it is in Germany. And whilst that employment rate is so high, consumer spending is also going to be muted, business confidence is muted. Where the growth comes from, it's hard to say.
China, Asia, picking up steam again. The US, arguably, picking up a little bit of steam in terms of growth. We'll see what happens in a couple of weeks with the sequestration. But is that enough to pull Europe into growth mode, or are there still domestic issues that Europe needs to solve within their own borders?
I'd say there's still domestic issues. A brighter global economic outlook and key growth engines for global growth like the US, like China, which Europe particularly trades a lot with, that's going to be beneficial, but it's not going to be enough on its own. Most of Europe's trade comes within Europe, in which case if all the Eurozone countries are struggling, that's going to have a knock-on effect across the board. But also, as I say, what we're seeing in our data today, domestic market conditions still very weak in a number of markets, particularly everywhere apart from Germany. And if that continues and there's no demand, where does the growth come from?